Welcome back to my channel, Miss Personal Finance, where we are budgeting our way to financial freedom. This video is going to be part of our adulting series, and that series pretty much outlines all of the things that I wish I would have known financially back in the day when I first started working or when I first started handling money and credit. I go over personal finance mistakes I've made in the past, and again, things I just wish I knew a little sooner, in hopes of providing some tips and advice to others so that they don't make the same mistake. In today's video, we're going to go over what is a W-4 form. When you first get a new job, especially straight out of high school or straight out of college, one of the most important things you're going to find out about are taxes. Form W-4 is the employee's withholding certificate, and it is specific to employees who receive a W-2 at the end of the year. This is different from a 1099 NEC or any kind of 1099. And the difference is from a W-4 and a 1099 is that the employee holds on or withholds your federal taxes for you and pays those on your behalf. Whereas a 1099 job, the employer gives you all of your income, basically your gross income, and you are responsible for making those quarterly or annual payments to the IRS for your taxes. So it can get very confusing if you don't understand the difference between the two and how to properly fill out this form. This form is specific to salaried or hourly workers who receive a form W-2 at the end of the year to file their taxes. So this is a 5-step document, and a lot of the times not all 5 steps will apply to you. So when you receive this W-4, when you first start a job, a salaried or W-2 job, the employer needs to know how much taxes, if any, that you would like them to withhold from your paycheck. So as you know, when you receive your first check or any paycheck, there is a gross amount, the total of hours worked times your base pay, and any overtime or any additional pay, minus all of your taxes and deductions. And that will provide your net income. So that is what you will actually receive deposited into your account after all of those things are taken out. So this form helps with that calculation. So we can go ahead and fill out this form step by step. Just as an example, if you're new at a job or switching jobs from your existing one, and you will see this form as part of your orientation or your new hire documentation, and you want to know what you're filling out and how to fill it out correctly. Because one thing about the W-4, your HR department is not necessarily going to tell you how to fill it out. They may give you some tips and suggestions or direct you to the irs.gov website for more information, because they're not going to tell you what to put on there. It's up to you as a taxpayer to let them know how much you want them to take out of your paycheck. So we'll just go through in order. And step 1, very basic, just your personal information. So it's going to ask for first name and middle initial. So we're going to say first name, middle initial B, last name Doe. Okay, so first name, middle initial, if you have one. If you don't have a middle initial, just leave it blank or just put your first name. And then social security number. Your social security number in the US, as you know, is 9 digits. Is it? Yes. Okay, so you enter your social security number and your address. So 123 Main Street. Now, unless you've changed or moved residence, they would like this address to be the same one reflected on your tax returns when you file. So But if not, again, if you've moved or changed address or changed your legal residence, then it can be different. 123 Main Street. Let's just go with Alabama. All right, zip code. Okay, so in this box here, it says, does your name match the name on your Social Security card? If not, to ensure you get credit for your earnings, contact the Social Security Administration, and they have their phone number and website. So for your first and last name, they do want to make sure that it matches whatever records are in the Social Security database. So again, unless you've had a recent name change due to marriage or a legal name change, you want to make sure that your name is as it appears on your Social Security card, because especially with new hire, you will see that they will ask for identification, and Social Security card may be one of those items that they collect. Okay, so that's sections A and B. C, it's really just your filing, your tax filing status. This is important because some people, especially when they see single, I remember when I was younger and I was filling this out and I saw single and I'm like, well, I'm in a relationship. But guys, this only pertains to your tax status. So if you are not legally married for tax purposes, you are single. So no offense to your significant other, your fiance. If you are not legally married, the IRS considers you single for tax purposes. And that just ties into the amount of deductions that you could qualify for when you fill out your taxes. So single or married, filing separately. So that means if you are legally married, but you guys will be filing separate tax returns, essentially you're going to be in the same tax bracket as a single person. Now, if you are married and you're filing jointly, you're filing together, or you're qualifying surviving spouse, which means you were married, but unfortunately your spouse passed away that year or the previous year and you haven't remarried, then you would still get the added benefits, the added tax deduction of when you were married. Head of household is a filing status if you are single but have dependents that you support financially. Especially if you are new to the workforce, you don't have any dependents, you're not married, a lot of these things won't apply to you. But we'll go through each step just in case. If it does, you'll know how to fill it out correctly. All right, so step 2, it says multiple jobs or spouse works. So complete the step if you hold more than one job. So if you have a side hustle, if you're door dashing or doing something that actually gives you a 1099 instead of a W-2, this would be a good spot to account for those taxes. So that way you can have this employer withhold the taxes for you for that second job without you having to pay or hold that separately to pay the IRS quarterly or at the end of the year. So it doesn't come as a surprise that you have a tax bill or a tax liability because you had not taken out the taxes from your 1099 income. So this is a great place to account for that. What that means is your paycheck at this job will be smaller, but you will be paying the taxes for the extra money that you're making on the side. Also, if you're married filing jointly and your spouse also works. So in this case, you can account for all the taxes owed for the household. Because remember, when you are married filing jointly, the IRS is putting both income sources together and then taxing that total amount. So this gives you a good idea of what taxes you would have for the household and not just your income. As you can see, there's only really one box in this section. And it says in section C, if there are only 2 jobs total, you may check this box. Do the same for form W-4 on the other job. This option is generally more accurate. So what this means is if you only have a household with 2 incomes, each spouse is working just one job. If you check this box, they'll take the accurate amount of taxes from your paycheck. And if your spouse checks that box, their employer will take the accurate amount from their paycheck. So they're not really commingling, and they're just taking out the correct amount for each spouse. Okay, so in this section, step 2, again, you don't really have to do anything. It's just letting you know if you have multiple jobs or your spouse works, or if your spouse is self-employed. Self-employment also falls into what we would call 1099 income, which again means there's no employer taking out the taxes for you. So that means they are responsible for paying their quarterly or annually taxes from the income that they earn through self-employment on their own. So if one spouse has a W-2 salary job and the other has self-employment, again, just like the side hustle job, you can pay all the taxes from that one spouse's paycheck. Again, that does mean that your net income, your total paycheck will be lower. It will be less, but you would have already accounted for all of the taxes for both spouses in the household. In this section, it's essentially letting you know you have the option to account for taxes for multiple jobs or a household where the spouse works or is self-employed. So you would leave this blank and only check this box if there are only 2 jobs total, 1 per spouse. And each spouse would check this box. Now, if there's anything different, you leave this blank. So essentially, step 2 can be left blank if none of these apply to you. All right, step 3, claim dependent and other credits. So when you go to file your taxes, if you have any dependents, whether that is children or adults that you support financially and qualify for a deduction, this is where you would account for that. Right now, our tax code gives about $2,000 per child under the age of 17 and $500 for any adult over that age. So you could be entitled to money on your tax returns for those dependents. This is where you would put that information. So it says if your total income will be $200,000 or less, $400,000 or less if you're married filing jointly, then you would multiply the number of qualifying children under the age 17 by 2,000, and then you would multiply the number of other dependents by 500. So that can be if you financially support a parent or a sibling or even a friend, as long as they live under your roof in your household and you are providing more than half of their financial support. And when you add these amounts, this will calculate the deduction or the amount of taxes that don't need to be withheld for these deductions. My advice personally would be to leave this blank because you never know if you actually will be able to claim these dependents on your taxes. A good example of this is if you have one child or dependent and you're not married, you and the co-parent would have to decide based on living factors of that year, who would claim that child. So you may think that you are eligible to claim the child and something happens throughout the year where that changes and the co-parent gets to or has the right to claim them. And now you have not accounted for taxes on these funds. So I would personally leave this blank because you never know what's going to happen throughout the year. However, if you want it to be as accurate as possible, you can go ahead and fill out this section, which will take out the amount of deductions that you wouldn't be necessarily taxed for. Now, if you do fill out this section, my advice would be throughout the year, monitor this. So if anything changes with your household or your dependent status or anything financially, you want to go into the system and update this section. Okay, but otherwise, it just wants to know if you're claiming any dependents so that they can not pull taxes for that amount. Okay, so again, this step 3 may or may not apply to you. So it is okay to leave it blank. This can be left blank, and in section 2, you don't need to check the box if C does not apply to you. All right, so moving on to step 4, which also says optional and other adjustments. This is where we actually get into the nitty gritty of what was explained in step 2. So other income not from jobs. If you want to withhold tax from any other income that you are going to or expecting to receive this year, you may go ahead and account for it here. So examples would be interest, dividends, or retirement income. So if you have a high yield savings account like we do, you can accrue hundreds, even thousands of dollars of interest per year. So like us, we have to account for the additional tax liability. So they're going to tax you on that interest that you earn from the high yield savings account. So you can put that income here. If you're earning dividends from stocks, you can put the amount that you would like withheld as taxes from your dividend. And also retirement income. So if you're earning retirement income, if you're of retirement age, or for any reason you have liquidated any retirement accounts early or prematurely, you can account for the taxes that will be due for that tax year here. So this is a very important section. If you have other taxes that need to be withheld from other income that is not from a job per se. So if you have any other deductions or claims other than the standard deduction, you can put the amount here. Section C, this is a catch-all. So any extra withholding that you would like to take out each pay period is where you would add here. So in the example that I use, because we have self-employment in our household, if I wanted to withhold extra, a specific amount each paycheck to account for my husband's self-employment tax, I can do that here. If you just are overly cautious and want to make sure that you have the correct amount, you can withhold extra. Now, keyword is extra. If you fill this out, you will, based off of the single or married filing status, your employer will take out the amount based off of that filing status. Now, this extra withholding will be in addition to what they take out up here based off of your filing status. So this means extra taxes will be taken out of your paycheck if you put an amount here. Okay, so as you can see, the only section that needs to really be filled out is step 1. Most importantly, section C, your tax filing status, not your relationship status necessarily, but your tax filing status. 2 through 4 are optional, depending on your specific household situation. And then step 5. Step 5 needs to be signed and dated. So you're going to do Jane Doe. And then today's date, we're just going to put any kind of date here. So step 1 and step 5 are mandatory or required to be filled out. Steps 2 through 4 are optional. And as you can see, you stop at step 5 because under here it says employers only. This is where they would fill this out and have it on file. Now, a couple of things about the W-4. The IRS provides instructions on pretty much all of their forms, including this W-4. So there are instructions on irs.gov if you go on their website, and it'll walk you through each section. I just felt like just putting it in layman terms and going through is a little bit easier to understand than what the IRS does, but just know that those instructions are always available and are updated regularly on irs.gov. The other thing is changes. Now, usually this form is filled out electronically. There are still companies that use the paper format that you could submit to your HR department, but just know this can and may be required to be filled out electronically. The sections are still the same. The steps are still the same. It's just going to require you to do it online and automatically submit it. Now, to make any changes throughout the year, let's say if you get married or if something changes and you're no longer married or you're separated, that can change your tax filing status, and that's going to in turn change the amount of taxes that are taken out or withheld from your paycheck. So in order to make changes to this form, you can either contact your HR department directly. Most of the times there is an HR portal that you use at your job that you can see your paychecks and view HR information. That's a good place to make any corrections. But if you're not sure, just ask for help. It's important that you are withholding the correct amount of taxes so that you don't have a huge tax bill at the end of the year that you're not expecting. Now, if you choose to not withhold any taxes at all, because you know that you won't have a tax liability and you didn't have one the previous year, you can actually, there are some employers that offer you the option to exempt yourself from any withholdings, meaning zero taxes are being withheld, but that just means you are 100% responsible for any tax liability that you would have. In this case, it makes it easier for employees because the employer is already taking out the taxes for you. They're already paying it on your behalf to the federal government, so you don't have to worry about it. And at the end of the year, basically, the IRS is going to reconcile the amount of tax that you've paid and the amount that you've owed. So if you've overpaid, this is where you get a refund, a tax refund, because the IRS is essentially giving you back the overpayments that you've provided them throughout the year. Now, if you are having taxes taken out of your paycheck or withheld from your paycheck regularly and you still have a bill at the end of the year, that just means that you have not set aside a sufficient amount of taxes throughout the year and you owe the IRS that difference. That's when you get a tax bill or have a tax liability. In that case, you would owe funds at the end of the year to make up for the difference that you didn't withhold. And that also tells you that your W-4 form is not filled out correctly for you, for your specific situation, for your household for the year. So after you make that tax payment, I would recommend going into your HR portal or talking to your HR department to update your form W-4. And you should be able to update this regularly throughout the year if you need to. If everything remains the same in your household or your tax filing status, you don't have to update this form regularly. You only need to make changes if there are changes to your tax filing status or if you would like to withhold more or less taxes. So again, folks who find themselves with an unexpected tax bill can usually trace it back to their W-4 form not being filled out correctly for their household situation. Okay, guys, that's it for this video. I hope you found it helpful, especially if you are brand new to the workforce. They're providing all of these new hire documents. You don't really understand or know what they mean. This is just a breakdown, a walkthrough of the Form W-4. And again, this is for salaried or hourly workers who receive a W-2. 1099 employees or 1099 workers, do not fill this out because your employer will not withhold taxes for you. You will be responsible, or you are responsible for withholding your own taxes and for paying them to the IRS, whether that's quarterly or once at the end of the year during tax time. So if you have any comments or questions, please feel free to leave them below. Don't forget to like and subscribe. And remember, whatever you put your energy and focus towards, you're bound to see progress.